James, welcome back to F.A.C.E. How are you?
Make sure I'm unmuted. Can you hear me?
Yeah, you're good. Got your photo up here, James. Welcome back.
Thanks. Thanks for having me again. Always a pleasure talking with you.
Okay, so are you going to share your screen?
Yeah.
Anything you want to show
Let me see what I got.
today? I'm interested. I know you're a sound, hard money guy,
Mhm.
and with the Fed coming up in the next couple days, and gold seems to be respecting this 1794.95 level multiple times over the last several weeks. What's your read on gold going into the Fed?
After the last time the Fed came out, obviously gold got hammered pretty well. I mean, it's shown strength of late, but there is some downside risk. I don't think it's huge. I don't think it's going to be anything. Sorry about all these dings. I need to turn off this this
Okay.
iMessage thing. 1 second.
All right.
All right. So yeah. So I mean, first and foremost, I'm not a day trader. This is not what I
Right.
do.
I
I'm
know.
much more of a medium, long-term speculator in this.
Okay.
But
So then
just
let's talk. Let's go there then.
let me share my
The
screen so I can give you guys a little bit of. I
okay.
was having a
It's a
little
green box, buddy.
green box. 1 second.
Yeah. Share a screen, green box.
Yep. Then it gives me all these damn options. Desktop,
Yeah. Choose the screen you want.
share. Oh God. Got grant access. Just 1 sec, Dale. Sorry about that.
Okay. It's okay. I'm guessing you're probably going to want to talk about Basil
You know
and
what?
not, huh?
I
No?
mean, a little bit. I mean, everybody had this it was so hyped up that was going to make an actual change in the short term, and that's so
Yeah.
foolish. Obviously that the London portion of that was not supposed to start until Q1 2022, and to be honest, I mean that's
Okay.
where mostly unallocated gold and silver is getting traded is in London, not in Europe. So, I mean, some in
Okay.
Switzerland, but I mean, it's there's still people who think that that's going to have an effect. I think it's remaining to be seen. What's going to have more of an effect is doubling the monetary base in
Yeah.
almost like 2 years time. But eventually, that's going to have a real effect. There's a lot of people who think, oh well, it's just like 2008. It'll just stay in the banking system. I'm not sure that's true, given the longer term goals. I think of where we are. We're in a situation in the next 20 years where we have a pile of promises and unfunded liabilities that cannot be nominally met if we continue along these lines in terms of GDP and what we produce in real goods and services in the in terms of the economy. So the most expedient and fastest way to usually take care of this kind of situation historically is to have the reserve currency really devalue in real purchasing power in nominal terms. So we're probably staring at a super cycle in commodities this decade and the next. And also a sophisticated, lot different, and it's different than the 1970s. Of course, we have a lot different demographics. People are aging. We have technology obviously pushing on the deflationary side, and then we also have forces that are pushing on the monetary side to consolidate the banking system. Right? I mean, if you were going to create a central bank digital currency and have the banks just in the center of between them all, we're just going to have further consolidation of the banking system. If you look at the banking system in the last 10 to 20 years, we've gone from having just over 10,000 banks and thrifts to now like 5,000 banks and thrifts. Every time the banks, offer a merger, the Federal Reserve just greenlights it. They've never said no in the last 20 years. What does that tell you? It tells you they're going to continue consolidating the banking system and gaining more control over it. So now the Federal Reserve and the U.S. Treasury are in charge, and I think ultimately they've told people what they're going to do long term. And when they get pressed, like in 2011, Kyle Bass was running his mouth a lot about gold back then, and
Yeah.
he made a poor trade for the University of Texas, and paid for that, I think, in terms of reputation. But he did say a lot of things out loud in 2011 that were pretty interesting. And one of his things that he said that were really interesting was the fact that he's talking to higher up in the Treasury for the Obama administration, and he's pushing this guy and saying, like, how are we going to how are we going to pay off all these unfunded liabilities if we're not going to have nominal wage deflation, if we're not going to somehow get more competitive with our foreign trading partners like China and others? And the guy gets pressed, and he's like, well, we're going to export our way out of this. And it's like, well, I mean, how are we going to do that if you don't ruin this, the salaries and pay them dirt? He's like, we're just going to devalue the dollar. Essentially, we're going to kill the dollar. I mean, that's the easiest way, right? And so I know that in the short term, yeah, the dollar's holding up well versus all these commodity currencies, et cetera. And all these currencies, everybody's blowing out their monetary basis. So what we're staring at is essentially a big inflation coming for all fiat currencies. And the dollar, if the system starts changing, right? If the idea that the dollar backs, 60% of the reserves that are held by governments, if that is changing. You see a lot of these governments going, they're going out and they're buying gold, they're buying yuan, some of these countries, for preparing for potentially doing more trades directly with yuan without dollars in between. The euro will probably gain a little bit further exposure, I assume, as time goes along. So and there's going to be a lot of changes technologically, and the system's not going to be, I just think we've talked last time about how the SDR is probably coming in an MSDR system, a new bond system that will kind of supplant the U.S. Treasury market as being dominator of things to come in the next few decades. So yeah, there's a lot of changes and they're big things. So it's not like it's happening tomorrow, but I'm looking out 5-10 years with this trade, and I'm not trying to make a quick buck on it. I'm more thinking in terms of,
capital preservation.
Yeah, of course.
Yeah, right.
That's the key first and foremost in terms of, and you can swing trade it for sure. I mean, obviously you can keep a certain percentage to do short-term trades on it, but I mean, for the majority of it, it's much more of a prudent, position that you don't really you don't trade much. You just kind of keep it there for capital preservation.
Does this mean anything to you, James? With the yuan finally kind of turning the corner after being in a downtrend for a while? Implications, is that normally, I think the correlation has changed on and off. I think when USD yuan used to go up, it was kind of negative for the gold.
Mm-hmm.
And wasn't it? I mean, correct me if I'm wrong. I'm just guessing, but the correlation, I think, means more risk off, even though it's a real managed currency. I'm just wondering, when you look at this is short term, but you look at the weekly, this thing may be bottoming. Does it have any kind of implications? And
for sure. Okay. If China goes out and starts devaluing the yuan versus the US dollar, it's going to throw it'll be an issue in terms of the system for sure. I mean, China, if you sit down and look at China, like obviously they don't have like a bond market that's anywhere near the size of the United States. They don't have the ability for people to move capital in and out very, very seamlessly. So they don't have an open capital account. I mean, it's not the US. No, and that's why the U.S. dominates the financial system. But China knows that they have to play ball in order to get some sway in this, and they're obviously. I mean, I was just looking the other day. There was you probably saw it on Twitter. There was a graph that went around that showed the world's largest trading partners from 2000 to now 2020. The graph in 2000 was virtually all blue. Only China's near neighbors were beating the United States in terms of being the major trading partner, and now it's reversed. It's virtually all red. I mean, only Mexico and Canada and like Colombia. That's it. That's all. We're the only ones. Those are the only countries that we are the number one trading partner with now. Everywhere else is just red. China, right? So, in the longer term, they're going to figure out a way to get involved, probably with the IMF. I'm assuming they'll use that as their stopgap. They'll probably be involved because they're already involved with the SDR. The yuan is part of it. So I'm guessing in the MSDR, the yuan's going to be involved. The question, I guess, for me all the time is I've heard people looking at the numbers and saying, like, obviously 6.5 yuan to the US dollar, when they look at the trade flows and how things are, that they think it should be much higher than that, in terms of the yuan should be devalued by a huge percentage, like going back to 10, 20 even sometimes, I've heard people say. So if the yuan devalues, I mean, that's going to be in some type of really big manner like that will throw everything off. That'll be a catastrophe, that'll be a big event in terms of the financial.
Well, I mean, they are having problems in Asia. Equity prices are under a lot of pressure.
Right, and I've seen that they're raising.
They look the opposite of U.S. and European markets.
Yeah, but I mean, let's be honest. The U.S. market's not financially healthy. It looks like obviously it's going straight up a wall and of late in terms of the stock market and such, but the fundamentals of it. Obviously, someday that'll matter, and when it does, you could pump all the currency you want into it. It'll still be a problem. I don't think it'll perform all that great versus other real things. So we'll see in the short term. You know, commodities have shown a little bit of weakness, but I think that's the short term, and more in the medium and longer term, they'll come screaming back. You have a situation where people like to pinpoint and look, oh, look, lumber and steel are crashing. And it's like, okay,
right.
well, I mean, I'm trying to think of what the latest one. Oh, yeah, and there's coffee all of a sudden going up a wall. And, you know, you start thinking about how much you get charged for some ridiculous cup of coffee at Starbucks, and just thinking in the future that's going to be like $9. You know, you think $4 or $5 is much for a coffee. It's like, they'll be serving you Robusto beans, not our Arabica beans. I mean, the price of goods and services in the future is going to go up. I think we're not investing enough in terms of, you know, making the supply and demand factor meet at a better price or an equilibrium. I think we've neglected a lot of that stuff in the last 10 years. So you're going to have a situation where oil is going to be high. There's not going to be as much oil as there once was. A situation where a lot of these commodities become a little bit more precious and scarce, and people still want
water. How about water there, James?
Of course. And they've telegraphed that for like a decade or two, and they're different.
Yeah.
You know, the powers that be love to tell you that we're polluting the earth, and we're like, you know, humans are like basically a virus, and they like to tell us that, you know, someday there'll be a problem with fresh water, and they'll tell you in a decade or two in advance. And yeah, that's true. I mean, in terms of a lot of places will have water wars, I think, in the coming decade or two. A lot of countries will have wars over water.
That's biblical. I mean, it used to happen.
Oh, right? Yeah. I know, over resources, over in order to keep, you know, your population and your farms going. Of course people are going to battle over that, because if you don't, you know, they're gonna have a coup on you, and you're gonna lose your head. So yes, of course. I mean, that's a real thing, and that's probably, it's already been projected. There's a lot of people thinking in the next decade or two that you're going to see a lot of water wars, especially other sides of the country. But I mean, it's
definitely an issue.
Yeah. But Dale, I think we should financialize it and create futures for it. I think that would be the smart thing, because that would save the world, right? I mean, no, I'm kidding around, obviously. But I mean, it's like everything needs to be financed. Can we financialize oxygen? Can we financialize what else do we need to live? Sun.
Make an NFT of a cup of water and sell it for $1 million. You know, I wanted to ask you if you have a view. In the last several weeks, we kind of broke out in the gold silver ratio over the 68.5 level. And it still looks like it has some upside here. I mean, I guess you could call it a bear market rally from where it came from. But does this have any implications turning back to the upside as it did? I mean, the implications of this were pretty obvious that, you know, silver was way undervalued here, and now we're getting a little turn in the market. You still, I know. Does it have to do with Reddit's short squeeze in silver? And that's why
we can talk about that for sure. I think the Reddit thing it's more about noise on the channel in terms of making noise on the social media screens, and the algorithms picking it up, and the larger traders using that as cover to I would think to coordinate and go long as well. But they have not yet done that. I mean, we're not even, I think right now
they're talking $1,000 silver.
No, obviously that sounds ridiculous, and it's easy to like laugh with someone when they say something that crazy. It sounds like, I mean, if I just look at silver right now, you're at $25. You could easily make a case for 3-digit silver, a couple $100 silver. You know, if someone says $1,000, if you say 1,000 ounce silver, that basically means like, oh, the currency's hyperinflating, really. I mean, that's basically what the listener thinks. So, because they don't know the history of this metal and how long.
Don't you think they're going to learn it's different to try and do a short squeeze? AMC is different than a global commodity market.
Well, it's different in terms of the size and scale.
Yeah, that's what I mean.
Yeah, of course.
I think I heard yesterday from someone the average Reddit account was about $300 to $500, mainly stimulus check money.
No, I think that might have been the case for some of those AMC traders who are on Robinhood. And that is the case too for a lot of these Redditors who are in the Wall Street Silver Reddit forum. There's a lot of small guys, kids in their 20s who, they can afford a tube of silver a month or something like that. But then there's also middle-aged,
Yeah.
middle-aged people who have a decent net worth who are taking, deliveries of closets full of silver, of, safes full of silver. So there's a lot of people out there who are pretty aggressive on how much silver they're buying and taking delivery of, and anonymously sharing through Reddit forums. I mean, there's a picture every day of some crazy stack that someone just got. So it's real, and I think it will grow. It's at 125,000 users right now. When things get hot, if you see silver move upward in spot, you see gold move up in spot quickly. Those could double within a matter of weeks. You could have 250,000 people on that forum, and then you could have 500,000 in that forum. That happens very quickly in terms of, the GMC phenomenon. It went probably sideways for a little bit or didn't grow that great, and then all of a sudden it gets some price action moving forward, and you get a little bit of press coverage, and every hot, momentum trader starts looking around, thinking about what's the next thing they want to put their money in, and you all of a sudden get a huge gap up in terms of people involved. So we all know, Dale, that like the large capital flows that are really going to move gold and silver are going to be the institutions and the high net worth investors, mainly from the West, but also there's a lot of Easterners now who are really wealthy in China, et cetera.
Yeah.
And the percentage allocations, and I've done the research. Let me see if I can finally share my screen and show this.
Okay, I'll stop sharing.
Nah, this thing, next time maybe. It's giving me this
buddy.
thing where I got to go in the preferences, and that's deadly for people who are even listening. So we're just gonna keep talking through this. On my Twitter feed, I have, if you go to @JamesHenryAnn, you can just run down my Twitter feed, and I think I tweeted yesterday about how truly tiny. In terms of, it was an interview of the top 150 family, not top 150, but 150 family offices by Goldman Sachs.
Okay.
Yeah. And you can see a whole bunch of, there's a subtweet underneath that one. If you click that one will show you a tweet about how truly tiny in terms of, the percentage allocations that are being involved with bullion and precious metals. So there's different reports out there. There's one that's done by Credit Suisse, and there's also one that's done by Frank Knight Templeton. I think Frank Knight is called. Frank Knight has a report every year about where they interview various family offices and high net worth investors, and they get an idea of what percentage are allocated to what. Precious metals is like slim percentage. Like the highest is in India, and it's maybe 6% of people's net worth is in precious metals. And then, North America is like 2%, 3%, very tiny. And when you look at gold in terms of where, as far as, throughout all investments that are on paper, it's still less than 1%. It's like at 0.7%. I mean, if we go back toward 2011 levels, it's going to be much higher in terms of the price. But if we go back anywhere near the 1980 levels, if we have a real concern about the fiat currency underlying, what its real purchasing power is, as we did in the 70s, I mean, the potential for gold to gap 3-4 times is there.
Where was participation rates back then? I was in the business then when gold went to 880, and you had the hunt squeeze at 50 bucks. Sure.
So there's a graph that shows if, 1980 in terms of investable gold as a percentage of global financial assets, it was just under 3. And right now, 2020, it's 0.7. So you're talking about
triple.
Yeah, tripling.
Quadruple.
Quadrupling, actually. I mean, and you get to that point, you have $8,000 gold, which if you do that, that's just a repetition of history, happening again. That happened in 1934, where the U.S. official gold reserves backed 40% of the monetary base. And same in 1980, it was much higher. It got over 100%. We could have gone back on a literal gold standard in 1980, 81. And then now that's the assumption, is that gold at this point, the amount of currency that's created right now, it needs to be around $8,000 for that to repeat. And I'm pretty confident we're going to go through that. I just don't know, obviously, the machinations. No one for sure, unless omniscience, I guess, might know. But I do think
so. The AK is based on dollar circulation.
Yeah, it's based on monetary base, M0, fiat monetary base M0. And Fred has a chart for that. I mean, you can look that up, and if you look at it, you'll see on a percentage basis, it's almost up 100% since the end of 2019, when the repo fiasco began, before the COVID thing started, they were printing. So,
Oh, you know, since you brought that up,
yeah.
what's your take on, I think Wells Fargo was the first one to pull in personal credit lines,
Oh
and
yeah.
other banks are doing it, not because they have a liquidity problem. The liquidity problem is they have too much liquidity that they can't keep on their books due to regulation. What are you thinking about this?
Yeah, that's hard to say. I mean, it's hard to make a guess on that. I mean, I
I mean,
saw a
why are
lot of
they
people.
pulling credit lines? Last time they did that was, after the crash in '08.
Right. And if you look at the prices of housing right now, we're in a
Yeah,
larger financial bubble now than we were then. So,
I
yeah, I would
can't believe
imagine
it.
that would be a specific, I think it was a specific loan that was based off your house, right? It was like a secondary loan where you're using your house as collateral for that loan up to 100 grand. It's probably a
Yeah,
lot better of a way to use credit than, say, credit cards, especially if you're somebody who is not paying off your credit card every month fully, right?
right.
So yeah, I'm imagining that they were concerned. I don't know. I don't know enough about Wells Fargo's books. I don't know enough about it to make an educated
Well,
take.
it's happening in Canada. I talked to a trader friend of
Oh,
mine
of course,
there, and
it's
he's
happening
in
there.
Toronto, and it's happening there too.
Well,
Just wondering if you knew
Canada
anything about it.
obviously is in a crazier situation. How fast and how high their bubble has gone up in terms of Vancouver and Toronto
Yeah,
and
yeah.
all the other cities there. It's still
How
like
about Panama? Is Panama real estate in a bubble too?
no, Panama's still cheap. It's not super dirt cheap, but it's not expensive either. It's kind of in the middle right now.
Okay.
I look around
Uh,
at prices, and most people are asking more than it's worth, but that's to be figured, because most of these people who are selling it are typically are boomers that are winding down and getting ready to go back to the United States and pass away. So they
I
want to
see.
liquidate their prime real estate, and usually they're doing it at a price that's pretty high. So they're going to have to get lucky to find someone to buy it. And I just look out at this place and I think, okay, the next 10 years, there'll be there'll be an equilibrium that's met between some offshore, expats who want to live here in this town and work online, et cetera, versus the baby boomer gringos that are going to be passing away in the next 10, 20 years here. And they're the people who inherit that stuff and come down and liquidate it. And then you also have a population of people who are coming in from Colombia or who want a secondary home, a place to park money. The same with Panama City. So you have mostly Panama City people who come in here to buy that kind of stuff, who want a
Okay.
little secondary country house. So there'll be a meeting of where the supply and demand is, but I think it'll be lower in terms of real value.
How about
Years.
the real estate bubbles in the U.S. and Canada?
I mean, how about that?
Any?
Dale, I would never thought we would have gone
Yeah,
past
yeah.
2008 again so
Me
quickly.
either. Me
Uh-huh.
either.
But
So
the lesson in history is that things repeat and rhyme all the time. So I saw yesterday somebody's talking about a 40-year mortgage, and they're thinking about doing that for homes, and
uh-huh.
that makes sense. You can't have BlackRock and Blackstone buy up every damn house in the world. Eventually, people are going to have to actually take care of the properties themselves. Could you imagine, Blackstone or BlackRock and their subsidiaries as your
Landlord.
yeah, I mean, could you imagine how
Yeah,
terrible they would be? I mean, that would
yeah.
be bad. So coming up with a way where people can actually own a home and pay a price that's stretched out way far in the distance and that has an interest rate that's locked in for 40 years, at least hopefully neighborhoods won't fall apart in disrepair. That's the problem, is a lot of these neighborhoods could fall apart in somewhat disrepair. And that's already happened. We see a lot of blight, especially in places in the Midwest and Rust Belt, et cetera. So you don't want to see that. You don't want to
Yeah.
see that happen in the West Coast and places where the homes could easily happen. It could fall in disrepair in a lot of these cities, and you don't want to see that happen.
Okay, James. Any last thought you want to share about what's happening here and going into the dog days of summer? Go ahead.
I mean, precious metals certainly have, I think, the potential to trade a little bit lower, but not a big amount, and they're not going to be going back down to prices that they were before the lows last year, and so that's just not going to happen. Not with what we've done to the monetary base. So you could,
Okay.
in the short term, you could see some weakness because we have a little bit of a lull in the interest that is happening. But I think come September, October, November, there should be a resurgence in the prices. Before the end of the year, I think we're going to have gold near a new record high again, and they're gonna have silver running back toward 30s. Hold on one second. Got a car going by.
Okay. We good?
Okay.
All right.
No problem. Sorry, I'm sitting out in
That's
my
okay.
backyard,
Yeah.
and truck goes by.
All right. Well, okay. And let me ask you this. What's a typical delivery time? I know you're a physical metal broker. Let's say I wanted to buy, 20 ounces of gold and I wired you money today. When would I have it?
If you wired good funds, you'd have it
Yeah.
within 2 weeks. You'd have it within 1 week for gold. Within silver,
Okay.
it would probably be about 2 weeks.
Because supply constraints still?
Yeah, there's still supply constraints in terms of meeting the demand that's outstanding. It's slowing down. It's getting better. The premiums are getting tighter on outsides, but that's still the case.
Okay. All right. So if you want to add to your portfolio of physical metals, James would be a good representative for you. And, the name of the company that you do it through, James?
Yeah, it's sdbullion.com. We're a top 5 retailer in the United States.
I get emails from them all the time, but when I'm going to add to my portfolio, I'm going to call you.
Appreciate it, Dale.
All right, buddy. So thank you very much for, joining us today from the Southern Hemisphere. And how's Panama doing in the Olympics? They have any representatives there?
I don't believe so. Otherwise, I would have heard
All
of
right. All right, buddy. Don't get caught in the canal, all right?
All right, Dale.
All right, James. That's a wrap, everyone. You have a great trading day. Gold is coming back, as James talked, but the gold-silver ratio still going up in gold's favor. And we'll see everyone tomorrow. You're welcome. And remember, don't just count your coins, your bars, your bags, count your blessings. Adios, everyone. Take it easy. Thanks again, James.
Yeah, thank you. Sorry about the non-share screen. Next time we'll have to figure it out, because I was ready. I had a whole bunch of charts to show.
All right. Well, now you're going to have another 3-4 months to get ready for it. All right, buddy. Have a good summer, buddy.
All right, you too, buddy.
See ya.